I'm Tim Regan, founder here at PrairieView Wealth Partners. I want to take just a couple minutes today to give you a brief update on where we see the markets. Before I do though, if you've seen out on social, we had a Valentine's Day challenge where we invited you to share with us pictures as well as how long you've been married. We had everything from just a couple of years all the way up to 56 years. So we want to celebrate with Vern and Carol, I guess celebrate with all of you, all members of our family, but especially with Vern and Carol Karras and David Bonnie-Chenoweth for being the winners of that challenge at 56 years of marriage. Each of them received some Sherry's Berries from us saying, way to go. And I can imagine that in those 56 years, you probably have seen a lot of ups and downs. You've probably seen times where you were nervous about where our country was going, times where you're nervous about your family, but also times where you celebrated. Celebrated those times when you guys are really, really close as a family. Celebrated those times when, as a country, we were doing really well. And that's a little bit about what we've experienced this year, I think. In about 2.5 months or so, we probably have crammed almost 56 years worth of stuff into the last 2.5 months. Seeing everything from riots at the Capitol to a new president being inaugurated, to folks down in Texas being just absolutely blasted by some winter weather. And here where we're at in Chicago, just south side of Chicago, just ending the longest cold period, I think since like 1821, I heard on the radio today. So a lot of things have changed in the last couple of months. We've also seen the markets go through a lot of iterations. Everything from people being nervous about a new president and what's that going to be for the market, to this sense of, do we need to have additional stimulus pumped into the economy? Where today, if you look at the market, in particular growth stocks, you would have seen those growth stocks get hurt a little bit. And it's ironic to me when I listen to folks and hear what they're talking about. When I say folks, I mean people on the radio or even some of the research that we're doing. It appears as though part of the reason that growth stocks in particular have taken a beating is because there's some concern around the economy doing too well and inflation starting to come back. In that scenario, growth stocks tend not to perform as well. And so I think that there's some of that. I think beyond that, though, we really have seen a really good run up in the market in the last 6 months at least. And so I believe that much of that, the correction that we're seeing, if you call it a correction, much of the downturn, is really due to the fact that we've had an economy that is starting to grow very quickly. We have the federal government that's pumped a ton of stimulus into that economy. And we've had stocks that have quite the run up, and we see some profit taking, if you will, in certain sectors. In our opinion, the market is going to continue to perform fairly well. We think it is going to be choppy. We think there are going to be periods of correction, but we think overall that right now is a good place and a good time to be inside of the equity markets. So our portfolios are staying neutral. We're not adding risk, nor are we taking risk away. We think that the neutral stance is the right place for right now. If we are the ones that are managing your portfolio actively, we will continue to do so and know that we'll make the appropriate changes as necessary. If for some reason you have questions, if you don't know if your portfolio is right, feel free to give us a call. Again, I invite you to connect with us on social. Thank you for being a member of the PrairieView family. Until we meet again, we hope we can help you to live your legacy with confidence. Be well.